We begin today with a bombshell out of Cupertino. Apple has filed a lawsuit against OpenAI, alleging the artificial intelligence giant stole trade secrets tied to consumer hardware development. This is not a minor international paper skirmish. Apple is one of the most valuable companies on Earth, and its hardware roadmap represents years of proprietary engineering work. The accusation signals that the cozy partnership narrative between legacy tech and artificial intelligence disruptors is fracturing fast. Markets are already registering the unease. The VIX is sitting at 16.34, up 8.72% on the session, telling you options traders are pricing in elevated uncertainty. This story is an Impact 10 development, and it demands your full attention. Apple filed a formal legal complaint against OpenAI, alleging the theft of trade secrets specifically related to consumer hardware development. Think next-generation device architectures, on-device artificial intelligence silicon, and proprietary integration frameworks that Apple has spent enormous resources building. What makes this extraordinary is context. Apple and OpenAI had publicly positioned themselves as partners, with OpenAI's models integrated into Apple Intelligence features. This lawsuit blows that partnership narrative apart entirely. No prior Wall Street consensus existed for this litigation outcome precisely because the adversarial scenario was considered low probability. The suit is now very real, and the damages or injunction scope remain completely unquantifiable, which is precisely what makes markets nervous. Here is the deeper macro story. The artificial intelligence commercialization race is now colliding head-on with intellectual property law, and Apple's lawsuit may be the opening shot of a much broader conflict. Hardware makers like Apple have invested substantially in building proprietary silicon, the M-series and custom neural engines, and they are watching artificial intelligence software companies potentially leverage that know-how to build competing consumer devices. OpenAI has been exploring hardware ambitions openly. Apple is essentially drawing a legal line in the sand. Our hardware secrets are not transferable to a competitor, partner, or not. This precedent, if it holds in court, restructures how every hardware-software artificial intelligence partnership gets negotiated and litigated going forward. Let's map the blast radius. Apple is at the center. If the suit fails on merits, Apple absorbs reputational damage and potential antitrust blowback for weaponizing international paper claims. Microsoft is OpenAI's primary backer, so a decisive Apple victory puts Microsoft's artificial intelligence investment thesis under legal and financial pressure immediately. Google faces a two-sided exposure. It competes with both Apple in hardware and OpenAI in artificial intelligence models, so litigation uncertainty clouds the entire ecosystem it operates in. NVDA, the infrastructure layer under all of this, is relatively insulated on fundamentals, but highly sentiment-sensitive. Meta and enterprise artificial intelligence players see defensive flight-to-quality bids if consumer artificial intelligence bets look legally vulnerable. The entire NASDAQ 100 at 29,020 is the pressure point. Traders need to watch three specific levels right now. First, the NASDAQ 100 at 29,020. The 28,500 level is your technical support floor. A breach there on sustained litigation fear confirms broader tech risk-off rotation. Second, the VIX at 16.34. A move above 18 would mark a volatility inflection point where hedging costs accelerate meaningfully for institutional players. Third, the 10-year Treasury yield is already pressing higher, which adds duration pressure to growth-heavy tech names simultaneously. On the catalyst calendar, watch for any court filings detailing the scope of damages or injunction requests. Those documents will be the first hard data that lets analysts attempt to quantify the financial tail risk here. The bottom line is straightforward but sobering. This lawsuit introduces genuine, unquantifiable tail risk to megacap tech valuations at a moment when the NASDAQ 100 is already navigating a challenging rate environment and to the VIX pushing toward volatility inflection. Apple is not a company that files litigation casually. When Cupertino goes to court, it goes to win. The international paper precedent at stake here could reshape every artificial intelligence hardware partnership across the sector well into Q3 earnings season and beyond. Position accordingly. Reduce unhedged exposure to the consumer artificial intelligence software stack. Monitor Apple and Microsoft price action closely, and keep the VIX above 18 as your risk escalation tripwire. That is the one story that matters today. Full breakdown is up. If this kind of deep dive analysis helps you trade smarter, hit subscribe right now and tap the notification bell so you never miss a market moving breakdown. We cover every major story with the depth and specificity that moves your conviction, not just the headlines. See you in the next one.